So Centrica in 2018 delivered a mixed set of results. On the one hand, many of the financials were resilient. We saw adjusted operating profit up 12%, and we saw EBITDA up 15%, and our operating cash flow was £2.25 billion within our target range, and our net debt was also within our target range at £2.66 billion. On the other hand, earnings per share was down 10% because of a much higher tax rate, and we were disappointed with the volumes in our exploration and production business, which impacted our result, and also in our nuclear power stations, which had some unplanned outages, and the recovery of North America business was slower than expected. So as we enter 2019, the year is a little bit uncertain, and it's a little bit different to what we imagined a year ago. There are three principal differences. There's firstly the price cap in the UK energy market, and the impact of this has been higher than we had expected a year ago, particularly with a one-off increase in the first period, which we are challenging. The second thing is our exploration and production volumes were disappointing last year and are going to continue to be in the lower half of their planned range. And thirdly, we've got some nuclear power station outages at the moment, and we don't know when they're going to come back. These three things have impacted our after-tax adjusted operating cash flow by a total of about £200 million. A year ago, we were signalling probably at the bottom end of our three-year targeted range, so call it £2.1 billion. And now we're looking, therefore, at a midpoint of £1.9 billion of operating cash flow in a range of 1.8 to 2. This means that even though we did deliver in line with our targets last year, our three-year cash flow target is under some pressure. We'll know an awful lot more about the outlook for 2019 by the time we get to the interim results, and we'll be able to update the market at that time.